Hello traders, I'm doing this midweek market focus. Today is the 13th of March 2013. I've called it the messy market, as the market at the moment is a bit unpredictable. What I'm going to cover today is snapback. I'm going to give you a few tips on how to put an extra envelope on the snapback. What you have to do is to make it fit, and I will show you how to change it as well. And then you'll be able to use the K2A's snapback, which is the one that comes with it, or the new envelope that I'm going to give you. So you'll be able to make it fit, and you'll be able to buy and sell using those two envelopes. Also, I'm gonna cover a few things here and there regarding the e-signal. Then I like to have a quick look at gold as well, and USD, Japanese yen, and Kiwi CAD. And besides these three different markets, and there is not much happening, I have to say. I'm not looking at anything closely apart from mostly gold and Japanese yen, to be honest. Kiwi CAD has been trading. It's been trading nicely. It's been following some nice patterns, some nice high highs and high lows throughout the last couple of months. That's why I picked it as an example of some nice cycles. All the other majors and minors, it's just a big mess apart from Japanese yen, right? Right. So let's get started. Right. This is the daily chart on Aussie. The first one that comes up here. I've got some indicators here at the bottom. This is the RSI 6, and I've got a nice and light yellow color as a background, and the price action is all the same color. It's all black, so you cannot see different colors on buyer bars and seller bars. I've got here the 50 moving average and the 200 moving average, and that's pretty much everything. And then the grid. So what I'm going to do first is to give you a few points and a few bits and bobs on how to use the e-signal. So for instance, if you go right click, properties, background is this one here. It's light yellow. And then if you pick this one as a light yellow, make sure the text which comes in white you put in black or gray. Yeah, that's black, and this is gray 80%. So you can pick that one, and the grid you can make it gray too. Right, any of these two colors would be nice. What's the grid? Is basically these lines here, this dotted line here. So pretty straightforward. You'll see that 1, 2, 3, 4 columns is actually 4 months, and then from line to line, it depends on the scale. It'll be more or less pips. So in this particular case, from line to line, it's 100 pips. All right. So if you get 2, it will be 200 pips. But if you make it a bit bigger, then it's going to be 50. And if you pick 2, it will be 100, and so on. Yeah. So it depends on the scale. It's going to change. Okay. Right. Now, this box here, you're going to take it on and off. You click here. You take it on and off. It says cursor window. It tells you the open, high, low, and close, and then the price of the moving average. Basically, if you put a cursor on top of this bar, for instance, and you look at these numbers here, it will tell you the open, high, low, and close of this particular bar. Same thing for every single other bar. Yeah. So you put it here, That'll be the open, high, low, and close of this bar where the cursor is now here. All right. What else? I use the pencil to measure the phase 1s and phase 2s. Okay, so for instance, phase 1, phase 2, phase 1. Yeah. I use this one to measure the pips from A to B. So from here to there is 254 pips, or 254.4. Okay. Then this one here is to draw horizontal levels or level of resistance. You can also get the price as well, so you can go edit, and then you go show price. You can tick the box on show price, then you can put it on the right hand side, it's always better, and then you can change it. You can make it black, thickness number 2, save as default, yeah, default, save currency as default, and then OK, and it will give you this horizontal line there. If you click once, you'll get the line, yeah, and if you left click again, then that's when you plot it. So for instance, if I want to plot it here, then that'll be that's when you plot it there, right? So now basically that'll be a nice level here, this one here, level of resistance there, and there, and there, and there. So that's why I've decided to put a level there, which is the ceiling of the house, and it's the level of resistance right at the top. So every time it touches the level, it reverses. You might get a bit of noise, like this one here, no problem. You might get a bit of noise, but it does reverse. Okay. So touches, goes down, touches, down, and again, right? So that's a nice level of resistance there at the top. At the moment, it's been going sideways. It's been going absolutely nowhere. It's just going up and down, up and down. So overall, the bigger picture, even if you go to the weekly chart, so if you type comma W, click enter, you will go into the weekly chart. And it's just going flat. Okay, up. In fact, let's make it black. It's going to be a much nicer color. Up and down, up and down, up and down, up and down. Yeah, so you can literally carry on going up and down. Make sure you remember that each of the lines is 1 week. It tells you there, weekly chart, yeah, up here. There is a weekly chart there. Now, I'm going to go back to the daily chart. So remember, you have to type comma the enter for the daily chart. Okay. And at the moment is pull back down, give a massive lotus bar here. For those of you who have covered divergence, there is one here, lower lows, higher lows, and it reverses. Yeah, lower lows, higher lows, and it reverses, bouncing off this level and that level there. This was on the 4th of March, was it? On the 4th of March. This is American, so it's the other way around. Month, day, and year. Okay. So today I've decided to give loads of tips on e-signal, mainly because there is not much happening. So I'm taking this opportunity to step back and give you a few tips here and there on how to use e-signal and how to identify turning points in the market, how to use the different envelopes on the snapback as well. And also we're going to have a look at gold too, and as I said, Kiwi CAD and Japanese yen. Okay. And this is Australian dollar versus US dollar, by the way. Right, so this is all clear. It's just going sideways. Okay, just going up and down, up and down, up and down. This is very, very powerful, this divergence here. So you get lower lows in price action, higher lows on the RSI indicator, and it turns, especially when you have a low test bar and it's bouncing off a level, then it does reverses. It's a powerful signal. This is against the trend. This is more massive trader because it's against the trend. It's kind of going down and you're looking to buy. So because it's against the trend, it can be very dangerous. All right. Okay, let's move on. Japanese yen. Sorry, let me just take all this out. You haven't seen anything, by the way. I'm gonna start again. Right now, here there's a divergence, by the way. Higher highs, lower highs, and it pulled back down slightly, and then it took off again. Cool. So there was one. I'm gonna point it out. It's there, and there. Yeah. There is one. Yeah. Lower highs here, and higher highs here. Okay. Right. This USD Japanese yen, so it's the other way around. So the base is the US dollar. So if the chart goes up, the US dollar goes up, and Japanese yen devaluates. And that's what the Bank of Japan is been trying to do for the last couple of months. So now it's still making high highs and high lows. Fine. Right. What we have to do now is to do the technical analysis part of it, which means we have to identify the trend, if there is any. We have to identify level of support and resistance, or horizontal levels, doesn't matter. They're all horizontal levels at the end of it. They can be acting as a support, acting as a resistance. It doesn't matter. They're all horizontal levels, and they are here. Yeah, it says horizontal level. So we pick that one. And remember, minimum 3 touches. So I'm going to put a line here. And we're going to also put a line, let's say, well, it's a bit weak, isn't it? It's just 1, 2, 3. Well, we can call it a level. It's a bit weak. I don't personally like it much. I prefer the other one, to be honest, because here it's broken through. So I'm gonna take it. I'm gonna take it off, actually. Yeah. Now let's see if there is a channel. Sorry. Now let's see. There, 1, 2, 3 touches. That's valid. And now here. It's a bit weak, but because the chart is going up, the level of support is much more important. So when the trend is going up, the level of support is more important, which is the level at the bottom. If the chart is going down, the line that goes above is more important. Okay? So in this particular case, this line here is more important than this line. Right, now, and what I do normally is, once you draw the line, you can you can change the color even from here. You go right click and you can change the color, number 2 and everything. Make sure you click on default, save current set as default, and then click OK. So you save it all. And then what you do, once you plot the line, by doing left click twice, left click and left click, it's all left click. So left click there, 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 and that's it. Then you go right click on the line itself, and then left click on copy, and you plot the line anywhere you want to. Obviously you need a channel there, right? So we're not going to put it here because it's breaking through, so it will be there. Although it's not very powerful, but that'll be the closest it can get. So now let's try and draw some faces. Phase 1, phase 2, phase 1, it might pull back down, retest, and then shoot off again, isn't it? Yeah, that's a phase 1, phase 2, so that's a level acting as a resistance. Then it might break through, pull back down, retest, so resistance is going to become support, and then it's going to take off. So normally when this happens, this scenario happens, you normally get a level of resistance at the top, then it eventually breaks through, pulls back down, and it becomes support. And guess what? It's also the bottom bit of the channel as well. And if you put a 20 moving average, it won't be too far from there. 20 exponential, make it blue, thickness number 2, leave that as it is, close and 0. Then click on OK, or save as default OK, doesn't matter. And there we go. So by the time it pulls back down to here, it's going to match up with the 20 moving average. It's also going to match up with the bottom bit of the channel. And if you copy and paste this line and you're trying to identify 20% of the move, you'll see that it's also there. Basically, what I mean with that is that if this is 0 and that's 100, this will be 20% of the move. This will be 20% of the move, which means it's within the first quarter, and that's known as the buying zone. Okay, so don't try and buy up here. Wait until it pulls back down and buy close to the bottom. Okay, right. I'm gonna start taking a few lines off because it's getting a bit messy. Out, out, out. Like that. And a 20 out as well. Remove, out. There we go. That's better. This one too. Right. So that's a much more clear picture. I'm expecting it to, if it pulls back down to here, and it might give a nice entry down here, and then off it goes. But let's see how it sets up. All the other currencies are not following any kind of cyclicity or phases or anything similar. This is the closest. Well, this is a nice phase 1, phase 2, phase 1. Yes, so it's following some nice cycle. The other currencies are just having just a massive rally. Canadian had a massive rally. Cable had it's just been tanking for months. Euro is very messy. All the other currencies as well. Swiss is the opposite as Euro pretty much. Right, so there's been one here, Japanese yen. Now if you have a look at gold. Okay. This is gold here. I'm gonna go on to I'm gonna make a bit smaller first. Right, this is what I see on gold. Big channel, again. Okay. Big channel there. I'm gonna go on to the weekly chart. This is the weekly chart here. Right. Weekly chart, touching there, there, yep. What else? So it's a nice channel there. Remember, when the currency pair or the a commodity or index, whatever it is, any market is going flat, the moving averages, they don't work. It just doesn't work. Any of the moving averages. Why? Because it's going flat, and it's just going to be breaking through the moving average. And even if you put a 20 moving average, you'll see that it's just absolutely doing nothing. So you just better off just take it out because it doesn't work. If it's trending, it works. You see? If it's trending, touches goes, and again, and again, and again, and again. Once it starts trending, it doesn't work. Okay, so remember that. Here is a bit messy, so it doesn't work. If it's trending, it works beautifully. It's going to be bouncing off the 20 or the 50 as it goes. This is the weekly chart, by the way. It's bouncing off the 20 and the 50 quite nicely there. And again, all the way. And again, all the way. And again, look, it hasn't broken the 50. It hasn't broken the 50 for 12 years. Let's see, that's 2002. Remember, this is the weekly chart. Since 2000, even before that, actually. Yeah, okay, let's call it 2001. End of 2001. Bouncing. He's broken through slightly, and then bounce back up again. Broken through slightly. Off it goes again. Bounces, 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 bounces. There's a bit of noise. Bounces, bounces, bounces again. Up to 2008. So for not quite 10 years, but for a really long time. And here it's broken through clearly, and it came back down to the 200 to the dot, and it bounced back up again. And then we are in a channel, so the EMAs didn't work. So I'd rather just take them out. Out. It's much more clear like that. Leave the 200 there. It's not giving you any clue anyways, but you can just leave it there for the sake of it. So now we're gonna go on to the monthly chart. Oops. This is what it's doing. And this is what it can do. It's going sideways. It's currently bouncing off this level. It can reach this level again, then pull back down, and again, and then it can break through this level here, and then pull back, resistance, becoming support, and then off it goes. If it takes out this high, which is the historical high, it hasn't gone past this level ever in history. And if it breaks through that high, then off it goes. Everyone's just going to start buying it and buying it and buying it. In fact, if it breaks through this level, everyone's going to start buying it. And if it breaks through that level, then it's going to be all over. That gold is the how do they call it? The safe haven, and everyone's just going to start buying it and buying it and buying it. And then guess what? Then it's going to shoot up to God knows where, 5,000. Yep, in the next couple of years. Okay. Remember the grid? The grid in this particular case is 1 year. So 3 columns, 3 years. So let's say another 3 columns, another 3 years. Yeah, up to there. 2 more columns up to somewhere there. Right? So you can kind of see the time frame by looking at the grid. You can use it as a benchmark. It works very well visually. You don't have to look at the numbers down here. You can just see the columns and the rows, and it just tells you straight away. So it's pretty straightforward. And then I'm gonna go back to the daily chart. Remember, it's comma D enter for the daily chart. If it's a letter like D, W, or M, you have to type the comma first, and you get a ticket box. You can even type the number there as well. You can even type comma 60 enter, but you don't need it. You can just type the number straight away. Because as you click a number, it brings the same ticket box. See? And then you click enter, and it takes you to the 5-minute time frame, or the 60-minute time frame, or the 240 enter time frame, or the daily chart. So it's comma D enter. Okay. Right. Now, this is the daily chart, which hasn't quite reached this level at the bottom. It was very close. There were many positions sitting here waiting. And if it reaches this level, it's going to give a very, very nice opportunity to buy. And then the key is just to sit and wait for a couple of years if you can. And so hopefully it's going to pull back down to here, and then it's going to take off. Yeah, and then it's going to go through the non-farm payrolls, and it's going to go through a million announcements and everything, and then at some point it's going to reach this level at the top. The sooner or later we'll reach this level up here at the top, okay? And it will break through as well. It's guaranteed that it's going to be taking these highs out at some point, because it's a safe haven. And everyone knows that gold has been bullish for 30 years and it's just going up, really. It can break through, take these lows out and pull back down to here, but eventually it's going to kick off again. Okay, it's going to be going up. Right. So, okay, this is pretty much done. If you get a closer look, a much closer look, it's not giving any divergence or anything. I'm still waiting for it. Still waiting until it pulls back down to here, to the level, to the 1.5.5, which is what everyone is looking to buy. 1.5.5 or 1.530. Gonna get some nice entries down here to go long from there. This more like end of day trading. In fact, it's more like long-term trading. You're looking to hold it for weeks, if not months or years, even. Right. Right. I think we had enough with gold. Make sure if you're looking to trade gold, it's very aggressive. It's more market trader. There are some rules that you have to follow as well. The most important one is that the value per pip goes down to 0.1. But in reality, if you trade gold on a 0.1 basis as a quantity, it's actually upon a point. So 0.1 on gold is actually upon a point. If you put upon a point, it's actually £10 a point. So whatever you put is times 10. Why? Because of the decimal point. Okay. Right. Let's go into Kiwi CAD. So be careful, because you might get it wrong and you might be 10 times overexposed on gold if you forget about this clue. This Kiwi CAD. Sorry for this mess. Let me just take all these lines out. Right. Okay. Cool. Okay. In fact, let's do it. Let's do it all again. Right. So basically, what you have to do is the following. You have to do the technical analysis once again. Let's put a 50 because it's trending, so we need a 50 or the 20. 50 in place. There we go. I'll put a 20 as well, if you like. Although it's not going to be bouncing nicely of it, but there we go. Right. So we've got Kiwi CAD daily chart again, with a 20, 50, and 200 exponential moving average, and the RSI 6 at the bottom. This particular currency pair, which is a cross, is not cheap to trade, is following some really nice cycles. It's making higher highs and higher lows, and it's been making higher highs and higher lows for the past couple of months. And it is very, very clear. It's probably one of the clearest ones out there in this moment in time. So when you're looking to draw some channels, it should be minimum 2-3 months type of thing to have because you need 3 touches, remember, and it cannot be 3 touches in three like 3 bars next to each other. It has to be throughout some time, and this time is normally month and a half, 2 months, 3 months. Okay, now Mm, I'm gonna put a line here, so we got a touch there, there, and there. Now if you copy and paste it, you'll see a channel there, very powerful channel. It's making higher highs and higher lows. Great. The 20 is not that powerful, so I'd rather take it away. There we go. And what else? Now, we had a divergence here. High highs, lower highs just about. Higher highs and lower highs there. Great, so it's giving RSI divergence. Now, what else we've got? So here it has pulled back down. Yeah, from this moment in time, it has pulled back down to here, then it catch up again. So it wasn't very powerful. It did reverse after this high test bar, but there was probably no horizontal level here. Let's see. Yeah, there was no horizontal level there. That's why it was a bit weak as well. So there was no level of resistance at the top. When you're looking to trade, for instance, income generators, you're looking to trade them down here at the bottom. Don't try and buy income generators up here. Trying to get them at the bottom, so somewhere at the bottom, right? Because you're looking to make money as it goes up, because the trend is going up. So you put the buying zone. Remember the buying zone? You spot the buying zone there. This is the area where you're looking to buy. It doesn't matter. It can be a bit bigger, a bit smaller. It doesn't matter. It's for you to know when is the best area to buy. Okay? It's approximately the first quarter. The first quarter of the move. Right, so what else we've got? Okay, we've got the buying zone. Let's put it a bit tighter. Doesn't matter if you get an entry here, doesn't matter. It's just for you to know that you have to buy at the bottom. Right, so now I'm going to remove it so you know what the area is. Right, here is getting a nice high test bar at the top of the channel. And it was giving a very strong divergence, but this is not a 3-day pullback. This is very, very tight here. It's just very, very small here, and also this against the trend as well. So we're not going to be looking to sell that. These advanced patterns here again. And so what we have to do is to plot the horizontal level there, and a horizontal level down here too, which is it's a bit weak, isn't it? That's level acting as a resistance becoming support, remember? Yeah, Japanese yen. So resistance becoming support. Off it goes. It gives another high test bar on the same level, pulls back down, and that's what we are now. It's not making higher highs and higher lows, so we're not going to be looking to buy that one there. But overall, it gave some nice, beautiful cycles. All right. Okay, now I'm gonna go on to Aussie Kiwi, which is the best currency for snapbacks, or at least it's been. It works very well on the 30 and the 60, not only on the 60, but also on the 30-minute time frame. Oh, look at that! And again, remember, resistance becoming support. It's happening again and again and again. These are common patterns. You see them all over. Look, resistance, support, and it's held by the 50 moving average as well. There we go, 4 p.m., 8 a.m. in the morning, 8 p.m. in the evening, so it's 8, 8, and 4. Wow. Okay. Alright, so that's 6 and 8 as well. Interesting. It tends to turn at 8, yeah. Resistance 8 in the morning. So, anyway, that's resistance becoming support several times there. It's not making higher highs. It's giving a funny pattern here. It's like a head and shoulders. That's one shoulder. That's the head, which always has to be higher, and that's the other shoulder. Okay. So what you have to do for the snapback is to use the envelopes, which I'm going to show you where they are. First of all, I'm going to take all the moving averages out. So this just price action is just price action there with just nothing there on it. If you're looking to create a new page for yourself, what you do, you go File, New, Advanced Chart, Default Chart. You put it here in the middle. You make it bigger, and that's it done. Okay. Then what you can do, you can change it onto bar charts. Take this box out. Done. Same. Yeah. Same as that one there. Exactly the same. Just with a different background, and the bars, all of them on the same color. Right. So now I'm gonna delete that. I'm gonna do it again. File, New, Advanced Chart, Default Chart. Left click on it. Just drag it from here. Left click, hold it. Put it in this corner, and you extend this corner down to here. Done. Okay. And then you click here. Bar charts there, and then you make it fit there nicely. Okay. Cool. Now I'm gonna go right click formulas. I'm gonna pick the snapback. There it is. Snapback. I'm gonna change the background. Properties, background in black. Okay. Oh, I have to change the bar chart. Let's make it. Okay, let's make it as it comes, which are bright green to go up and red to go down. Okay. Done. I'm gonna take the RSI. I'm gonna change the color of the RSI as well. So edit RSI. There. Done. And I'm gonna go right click properties and the text. I'm gonna make it white as well so that we can see it. Done. Okay. If you don't like black, you can make it gray as well, which is a nice color. Like that. Okay, it's up to you. So now this is also Kiwi on the 60-minute time frame, which is the best currency for snapbacks. If you see that it's not touching and it's not giving you entries, what I do myself is to put an extra envelope. So I go right click basic studies envelope. You put 0.18 there. So this number will change from 0.15 to 0.29. Then you put on length number 5 there, exponential. Change the colors. Thickness number 2 on both of them, and then click OK. And that's it done. Now what you have to do is to put the horizontal lines. Yeah, so we're going to do the technical analysis part of it. So I'm going to put a line here and a line there. What I'm going to do is I'm going to make them yellow now. Right, so it's just going up and down. sell those and buy those. Eventually it's gonna break through, and it broke through, and guess what? Resistance becomes support. Off it goes. And now it's not really going sideways. And if you look into trade, it should be going sideways, and it's happening again. Look, resistance becomes support once again, and there's another level up here at the top too. So for snapback, you can actually buy it there now as we speak. There, right? Resistance becomes support. It's touching the level. Resistance, breakthrough, bounces, 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 and this can clearly bounce off this level once again. Like that, and like that. Okay. So what you want is you want the currency to go flat. If it's going flat, it's just going to be printing money. So it's just going to be buying and selling, buying and selling, buying, sell, buy, sell, buy, sell, using the blue envelopes or the original envelopes. Okay. If you're looking to make the envelope a bit tighter or bigger, you go right click, edit studies, and you change this figure. Put 0.20. Click OK. Now it's a bit bigger. So when it touches there, you buy, 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 and here you sell, sell, buy, yeah, buy. Okay. And also it's better if you use the horizontal levels as well. I hope it's making more sense how to trade snapbacks, how to change the envelopes, and how to make them fit as well, how to use e-signal as well, how to change the background, how to change the text, the color of the bars, everything, how to make it bigger, smaller, how to put the horizontal line, support and resistance, phase 1, phase 2, channels, support become resistance, resistance become support. We've also covered gold as well. We'll also cover Japanese yen and Aussie as well, Aussie dollar. And then what was it again? Kiwi cat, I think it was. Yeah, Kiwi cat. Had a quick look at Kiwi cat because of the cycles more than anything. We've seen a few high test bars and low test bars, very powerful in trading. It's not much happening apart from what we cover up to now. And just need to keep your eyes open, and you can take this time to observe more than trade. Wait for the markets to go back into shape, and then once something is jumping out at you, go through that checklist that you should have. Go through some clear rules and patterns, and trying to identify the cycles, phase 1 and phase 2, high test bars, low test bars, buying zone, selling zone. Make sure you risk manage accordingly. You have to be disciplined, and you have to stick to the rules. Check the news if you're doing intraday trading. If you're doing end of day trading, just watch out for the non-farm perils once a month. And happy trading. Alright, I hope it's making more sense. And I'll be answering the questions that I'll have on the Carded website until it's finished, which is 24 hours from later on today. And then I'll catch you all soon. Alright, cheers there. Bye now.